This is Alpha. Let's continue our discussion from the last issue. Replacing emotional operations with standardized trading. Unique use of technical analysis in microanalysis. Let's continue to analyze the framework of short and medium-term strategic trading. In the fundamental analysis of short and medium-term strategic trading, the key information is different from that of long-term strategies. Because we need to pay more attention to short-term risks rather than long-term potential, we should focus on risk analysis from the following aspects. First, does the market environment have short-term risks? Second, does the target have hidden risks? Third, is the price far out of line with the company's value? I will not discuss this information in detail. I will focus on my technical analysis ideas for short and medium-term strategies, which is also the uniqueness of my trading framework. The technical analysis framework for short and medium-term strategies is still composed of two factors: capital volume and market sentiment. We know that there is no profit in the market, and no one can predict the future, but the market keeps repeating itself, but each time it is different. It is useless to carve a boat to find a sword. I think valuable technical indicators are not those that can predict the future, but at least those that can indicate market risks and sense the temperature of the market. Yes, the commonly used technical indicators in my strategy are only auxiliary, and the dominant role is played by some unique technical indicators constructed by myself. Although unique, they are not profound, and can help us understand the market from a rational perspective and look at market fluctuations in a logical way. Let's explain my cognitive framework from macro to micro. Let's first understand the factor of capital volume. This factor is easy to understand. It refers to the amount of funds or potential funds involved in a certain target transaction. The larger the amount of funds, the better the liquidity of the transaction. And market sentiment is also easy to understand. There is a saying that the brave wins when two sides meet on a narrow road, which simply means the comparison of the morale of the long and short sides. We know that whether a team can defeat an evenly matched opponent depends on the competitive state at the time, and its own strength on the other hand. If the market sentiment is compared to the competitive state, then the amount of funds in the market is its own strength. It is impossible for a team to maintain a hot competitive state in every game. It is useful to get excited occasionally, but getting excited every day is impossible. In the long run, it still depends on its own strength. Therefore, a target with sufficient funds can create sufficient liquidity, and can more easily support a higher transaction price. I will use a war scene to describe my set of ideas about funds and market sentiment. The theory may be more vivid. We imagine a battle between two armies. The two sides of the battle are long and short, and the front line of the two armies is the price position. The goal of the battle is to defeat the opponent's frontline troops and push the front line further. We know that there are two main factors that determine the outcome of the battle. One is strength, and the other is morale. When the strength is weak but the morale is high, the price front line can be barely supported, but it is almost impossible to push further. When the strength is strong but the morale is low, it is very dangerous at this time. At most, you can hold this front line, and you may be defeated by the opponent and fall. When the strength is weak and the morale is very low, then wait to be strangled by the opponent. The result can be imagined, but there will be a new world on the ruins. So only when the strength of the multi-party is strong and the morale is high, can we see a powerful and unstoppable world. Victory, and the rising stock prices. Yes, this is what a bull market looks like. We have a macro feeling of market sentiment, and next I will focus on the inner meaning of market sentiment from a micro perspective. We know that although the market is changing all the time, the intensity of the change is very different. Just like the sea, compared with storms and tsunamis, calm times are the majority. The market is a sea that is calm most of the time, and black swan events are rare. If the market background is in such a stable emotional period, then the market will not be very sad or happy. Just like an ordinary person in life, if he encounters fewer red lights on the way to work, he will naturally be happier, but this joy cannot be compared with a salary increase. After get off work, I went to buy vegetables and found 2 broken eggs when I got home. Although I felt unhappy, there was nothing to be sad about. Such daily emotions will fluctuate up and down within a range, and will not be higher than the ceiling or break through the floor. So, I think that when the economic environment is relatively stable, short-term market sentiment will make some seemingly random and restricted reciprocating movements between the ceiling and the floor. This is exactly the same as the picture presented by the screensaver with floating balloons in the Windows system. If the position of the ceiling and floor of emotions is determined, and the current emotional position is also known, can we feel the current state of market emotions more intuitively? So that we can understand the short-term opportunities and risks of the market. At this time, you may wonder, does this ideal market exist? Yes, it is impossible to have a completely ideal market state. Otherwise trading will be too simple. My solution to this problem is this. When the market sentiment has a significant change, such as the change from slow rise to fast rise of stocks, due to the divergence in pricing, the trading volume and price volatility will become very large at the same time, until the divergence is eliminated and the new upward trend is recognized by holders and potential holders. At this time, the trading volume also returns to normal. So this is the so-called stable period. So the stable period, or unstable period, can be identified by some indicators. In this way, we introduce an indicator of the degree of divergence. I think we can use this sign to help judge whether the market sentiment has changed. Do we need to redefine the position of the ceiling and floor of market sentiment? Speaking of this, the core content of the strategy has been explained. Friends who have studied technical analysis will say, isn't this swing trading? Yes, my strategy has some similarities with the main idea of swing trading. Both want to do low buy and high sell transactions. But I think the trading logic of swing trading is too rough. This may also be due to my personal level. How to match the meaning of its technical indicators with the trading ideas, I still can't understand this point. Of course, it is not ruled out that there are experts who can use swing trading to perfection. Some friends are not familiar with swing trading, but in fact they may just be unfamiliar with this term. Here is an introduction to swing trading. Swing trading is a medium to short-term trading strategy that aims to profit from price swings or fluctuations. It is between intraday trading and long-term investment, and the usual holding time ranges from a few days to a few weeks. The following is the trading logic and related indicators of swing trading. Its trading logic is as follows. First, capture price fluctuations. Swing traders try to identify and capture short-term price fluctuations in the market, which is called swinging. They use technical analysis to predict price turning points and buy when prices rise and sell when prices fall. Then there is trend tracking. Swing traders usually focus on the short-term trend of the market and make some transactions in the trend direction. They try to buy in the rising trend and sell in the falling trend. Then there is risk management. Swing traders will set stop-loss points to limit potential losses. They will also pay attention to market volatility and adjust the position size to control risks. The technical indicators they use are also some common technical indicators, which are used to judge the continuation and reversal of trends. For example, moving average MA and exponential moving average EMA, relative strength index RSI, moving average convergence divergence MACD, Fibonacci retracement line, volume indicator, support and resistance positioning, these common technical indicators. You may understand it as soon as you hear it. After talking for a long time, isn't swing trading the right side trading that everyone often does? The indicators used in strategic trading are also these commonly used technical indicators, but everyone's application standards and habits are different. But it cannot be said that this is better than holding the S&P ETF all the time, because swing trading still uses commonly used technical indicators. It has defects that other trading strategies cannot avoid, which I mentioned in the previous program. Okay, let's get back to my trading philosophy. Obviously, I don't believe that there is any trading strategy that can predict the future, but you can't rely on flipping a coin to make trading decisions. How can I make the risk of trading lower? I want to build a more convincing deductive logic. This deductive logic can be used to explain market behavior, and I need to find some technical indicators that correspond to this deductive logic. This set of technical indicators is a set of trading strategies based on market sentiment indicators. By monitoring the market status, it will provide opportunities and risks to stock prices during periods of relatively stable sentiment. The above thought framework is my personal observation of the market. I use them in my daily analysis and am willing to share this perspective with you. If you think it makes sense, please follow me and perceive the market together. Okay, that's all. Thank you for your company. This is a personal perspective, for reference only. My level is limited, please think critically.